So we are discussing how to set up your stop loss. So your stop loss should always be determined by the trading setup you are looking at and your trading plan. Your trading plan should tell you the setup that you look for, and it should tell you the exits that you are looking for. That's always your TP and your stop loss. You should always trade with a stop loss. Now, let's use past examples to determine where you would have put your stop loss so that you know in the future where you would put your stop loss. All right, so let's say, for example, we are trading this area right here, right? Or even this area right here. Either way, same area, all right? So you are looking at, you have had price give you a somewhat bullish impulse, right? And now you're thinking, oh, price could continue going higher. Now, price has dropped, as you can see, right? And then it rejected. Now, this rejection is telling us that price has retested the low, right? This is the last area that it made. This is our order block. This is the area that price made a big push compared to our bearish movement, right? Our previous bearish movement. Now we have a wick right here. Price has retested the low, it rejected, and then it pushed higher, right? So you probably bought when the candlestick closed. So you maybe, let's say your buy is around this area. This is where your entry is, okay? So since you have your entry, where would you put your stop loss? Now, you are looking at the candlestick, right? That is giving you the buy idea, all right? So for our trade to stay valid, price would have to stay above the low of the week, right? So if price was to push lower and come below this week, right, below the low of the week, then our price has been invalidated, right? Then that means price is probably going to continue going lower and lower, all right? So this is where your stop loss would have been, right? And then with your TP probably at the next high that you're looking at, right? And possibly even the next high, right? Maybe your second TP on the next high. All right. Now, why did we put our TP there? We put our TP there because of the clean traffic. This is clean traffic. All right. There is no conflict. Price is just moving, and that's what it did. All right. So you have entered your buy at this area, right? You have your stop loss just below that area, just below the wick, the low of the wick, right? So as price pushes, it makes a new low. You want a new high and a new low. You want to move your stop loss, all right? So that you can lower your risk, you lower your loss if price was to reverse and start moving in the direction of your stop loss. So where would you move your stop loss next? All right. Yes, that is the area you would move your stop loss next to this next higher low. All right. Because for price to actually push lower and invalidate your trade, price would have to close below this low. The moment it closes below that low, what does that mean? It's pushing price lower and lower. All right. So remember, for price to push lower, it needs to keep creating new lows, all right, and new low highs. All right. The same thing, if price wants to keep on going higher, it has to create new highs and new high lows. That means that price is pushing. But if it wasn't pushing, then you would have price creating new lows and new high lows. All right, now let's use, for example, where price is at right now. So let's say, for example, we are using this price action that we have been given right here for today. All right, so earlier during Asian session, price created this low, right? Now this low, what it's telling us is price has created a new low and it is pushed to create a new high. So yeah, possibly price could continue going. This is not a trade idea. This is just an example of how we set up a stop loss. All right. So yeah, possibly price could continue going higher, and you are looking at that, considering that price gave you a very small bearish candle, and that candle didn't go anywhere. You had a bullish candle next. Now this bullish candle has a wick above, right? That's rejecting the high, but that doesn't mean much because price still closed bullish. So for us to know whether price is going higher or lower, we would need to see how this 1 hour candlestick is going to close. All right, for those who are patient, we'll wait for this 1 hour candle. For those who are willing to risk it, that's why it's a risk. You enter however you are seeing it. All right, so let's say you are looking to buy. Where would you have put your stop loss? You would have put your stop loss just below this low, right? Because this is our nearest low. This is the low that price needs to break for it to continue going lower. All right, so for price to go lower, what does it need to do? It needs to close below, and that can push price lower to the next low and potentially the next low. But price is bullish. But this is just an idea. All right. Let's say you think price is gonna sell. Price has been going higher and higher, and you think price is gonna sell. So if you were to enter a sell right now, what is the nearest high that price needs to break for it to continue going higher to invalidate your trade? Then that means you would need to put your stop loss just above this high, right? Because this is the area that price needs to react to break, to close above for it to continue going higher. Otherwise, price would need to reject this area and then go lower. All right. Now, considering that our stop losses are always tight, right? You need to be aware that price does give us stop hands, especially if there is news or something that's happening in the world that could affect the markets. Price will give you stop hands. So possibly you could put your stop loss below this low. What if price was to dip into that stop loss and then reject? So probably it would weaken to that stop loss and pull back and not even close below. The same situation that could happen above, price could also dip above and then reject, right? It could dip above and then reject and continue going lower. All right. So when this happens, this is bound to happen at some point in your trading career. So when this happens, do not be shocked. Do not let it do anything to you. Take it as it is and reevaluate your plan. If the trade is still there, you have potential to enter again. If the trade is no longer there, you wait for the next setup. All right. So never enter a trade with a stop loss that you're not comfortable with. All right. So always say, okay, before I even enter my trade, I should have my stop loss and my TP, right? And you should know what your stop loss is going to be and your TP is going to be. So you should know if you're comfortable with that stop loss, if it fits in your trading plan. If it doesn't fit in your trading plan, and then you don't enter. You wait. You wait until a setup that fits into your trading plan has been provided. Now, this is the simplest way to determine your stop loss, and it's a good way because you are using the areas, the points that market has presented with you, is presented to you. All right. Now, let's start there and look at the areas. Let's start there and practice a little bit more. All right. Let's go into the past and we practice some more.